Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin is still almost perfectly following our early cycle scenario. And it's hard to believe that just a month ago, many thought that any type of bullish price action was impossible. And although we're open to the other outcomes, if the price action or data calls for it, it's hard to ignore how closely Bitcoin has been following our base case so far. And after spending early March and early April in extreme fear, we now have the market back comfortably in the greed region. And of course, you can't have bullish price action and greedy sentiment without endless articles talking about higher and higher price targets, like this one saying the Bitwise CIO is calling for 200K Bitcoin in 2025, thanks to a supply crunch. We also have many people considering 220K per Bitcoin reasonable in 2025 because of the Bitcoin power curve. And we have analysts saying that 250K Bitcoin in 2025 is totally possible because of institutional adoption and declining volatility. And maybe we do end up seeing some higher price targets, but I prefer to take things one step at a time. When Bitcoin was trying to hold on to the March high and 50-week moving average, we were just focusing on Bitcoin being able to hold that level. Once we came and reclaimed the range low, our next target was the range mid. And now that we have closed above the range mid, our next target is the range high. And if Bitcoin is able to clear that on a weekly closing basis, we can then start talking about price discovery targets. But we do have to understand that we are almost 2.5 years into this bull market, and the rally is getting steeper and steeper. So we do have to be careful with these price targets and getting too caught up in one potential outcome. But now that Bitcoin has put in this impressive rally, I am expecting price discovery very soon. And that's because Bitcoin is a very momentum driven asset. That's also why I called Monday's free weekly report momentum. Once we got that close above the range mid, it becomes very likely we retest the range highs and re-enter price discovery. And the thing about price discovery is it's very hard to know how high price is going to go exactly and come up with specific price targets that Bitcoin will reach. So I prefer to just follow my system and take small profits along the way as Bitcoin and Ethereum and Solana continue their rally higher, instead of just praying it reaches a certain price target and trying to sell everything at once just to find out that the market continues rallying without me. And if you'd like to learn more about my portfolio system or mental models I've used to navigate this market over the past 8 years, you can check out the early bird pricing on the Crypto Enjoyers program. But it is nice to see that Bitcoin is now only 3 to 4% away from all-time highs, and we're finally gonna retire this chart that has served us incredibly well during the entirety of this correction, while everybody else was freaking out and panic selling, expecting the cycle to be over. But interestingly enough, although we have market sentiment back in greed, we're not seeing a lot of retail interest come back into this asset class quite yet. Google search volume for Bitcoin is still quite low, even though Bitcoin is still very close to entering price discovery. And we can see that very clearly here. If this was an asset and we were doing TA on it, this would look like some accumulation before a breakout in the very near future. And this is likely because a lot of individuals have been taking profit and selling Bitcoin while a lot of the supply is being absorbed by institutions, ETFs, and businesses. And although I don't think this chart tells the whole story because a lot of retail participants are buying things like MicroStrategy and the Bitcoin spot ETFs, I do still think that a lot of retail has been ignoring this rally because they panic sold at the low during all of the tariff uncertainty and drama, and they're not really going to believe that Bitcoin is going to go a lot higher and pile back into this asset class until Bitcoin makes new highs. It's also nice to see that the spot ETFs are still getting inflows and we're not seeing any type of serious outflows quite yet. We're also seeing that the Bitfinex whales are still quite bullish with about 6.8 billion in longs. This was one of the things that kept us very cautious and calm during March and April when everybody else was panicking, because we saw the Bitfinex whales go incredibly long at the September low in 2024, and they rode the entire rally up and took profits into it. The lowest longs that they had was in the end of December, which is also conveniently right around where Bitcoin topped out. And then they ramped up those longs once again into the sell off and during all of the tariff drama. And they have been taking profits throughout this rally, but they're still quite a bit above where they bottomed out at the end of the rally in December of 2024. So it looks like the whales still believe that Bitcoin has higher to go. And this is probably due to the incredible narratives and price action that we're seeing right now for Bitcoin with this weekly breakout of our trading range that we first had as resistance in December, one deviation above it, two deviations above it, huge sell off. We reclaimed it in very early May and we just broke out, or sorry, about mid-April is when we reclaimed it, and we now broke out in early May, and there's very little resistance right now for Bitcoin between where it is currently and price discovery. And every single time we've seen a confirmed weekly breakout, Bitcoin has accelerated its rally and hasn't looked back. And so far, I don't see why this time would be any different. We are definitely cooking up some very strong narratives for Bitcoin with these Bitcoin reserves showing up all over the world. We have the Panama City mayor teasing a Bitcoin reserve after meeting El Salvador's Bitcoin leaders. We have Ukraine strategic reserve bill reportedly in final stages. And this is one of those things that once one country does it, everybody wants in on the action and nobody wants to look like they're being left behind. And we're seeing the same thing with corporate treasuries. We see here that a Brazil fintech company got approval to become a Bitcoin treasury company. Similar thing from a China-linked consumer brand planning to acquire 5,000 Bitcoin. And usually this is how bubbles get out of hand and this is how they really start to accelerate because everybody has now seen the profits that El Salvador is sitting on with their Bitcoin reserve and they see the immense success that MicroStrategy has had by just buying Bitcoin and adding it to their balance sheet and all of the debt that shareholders are willing to give MicroStrategy to buy more Bitcoin. And that results in more and more companies copying the playbook. And eventually it gets out of hand, or maybe Bitcoin enters a bear market and reverses. And all of this is likely going to end terribly eventually. But the thing with bubbles is they can get a lot crazier and go a lot higher before eventually collapsing. And this is the perfect rocket fuel we need to send Bitcoin to much higher prices via both nation state and institution FOMO as everybody tries to get in on the action of Bitcoin's price rallies. So we'll see what happens as of right now in terms of its relation to its 200-week moving average. I would consider Bitcoin expensive here in terms of this cycle. Of course, if you're DCAing Bitcoin for a 10-year hold, none of this matters, but this just gives us a nice idea of whether we're getting a good deal on Bitcoin compared to where people bought a year ago and compared to where people bought 2 or 3 years ago and the amount of profits that those buyers are sitting on. But I do expect Bitcoin to see the very expensive region before this cycle is over. And I look forward to taking some profits in that area if we do get there. But based on what we're seeing, it looks very likely that maybe we'll get some type of chop, but Bitcoin is headed to that very expensive region this year. Another reason why I remain optimistic Bitcoin has higher to go is the global liquidity index. It has been chopping around and slowing down here, but it's too early to know if this is a new downtrend. And if Bitcoin continues to follow it with roughly a 75-day lag, Bitcoin should still be in the clear for another month and a half or so, but we'll continue to monitor this very closely to see if this is just a consolidation before the global liquidity index heads higher, or if this is the beginning of a downtrend and we're going to see tightening liquidity over the next few months. But the fact that we have a macro breakout here still keeps me quite optimistic as long as we maintain above that breakout level, which we are doing very comfortably as of right now. And that gives me a strong bias that Bitcoin still has higher to go. We just need to see continued weakness in the US dollar. This big wick is a good sign that it perhaps could be rolling over, but we need to see some closes back in this risk on region to give global liquidity more room to the upside. And that should be a good tailwind for Bitcoin and other risk assets. And because inflation continues to head in the right direction while the labor market continues to weaken, and we are seeing pretty standard 2% forecast for GDP for Q2 from the Atlanta Fed, it does seem like the Fed is going to be facing more and more pressure to cut interest rates and slow down, if not stop, QT altogether. And that should be incredibly bullish for the S&P 500, which already seems to be pricing in a lot of that liquidity. And a bullish S&P 500 combined with rising global liquidity should be a strong tailwind for Bitcoin and other risk assets. Speaking of other risk assets, Ethereum still looks pretty good here, trying to reclaim the last major resistance level before 4K. If we're able to reclaim 2800, we likely see 4K quite quickly, and I don't think it's going to hold on the 10th attempt or whatever attempt this would be if Ethereum were able to make it all the way back to that level. I do think we saw true capitulation down here during all of that tariff drama and the 60% sell-off that we saw. And if we do reclaim this resistance, I think it should be clear skies for quite a while for Ethereum. Ethereum Bitcoin is facing resistance as well at the 20-week moving average, which did reject it back in November and December of 2024. So reclaiming this would be a big sign of optimism that the Ethereum Bitcoin pair has bottomed. As for Solana, still looking pretty solid above its 50-week once again, above its 20-week moving average once again, and above the range mid also. So the range high at 200 would be the next target. And if that is reclaimed, we probably go back to the all-time high quite quickly as long as the market maintains its momentum and we do have a confirmed higher low on the Solana Bitcoin pair as of right now. And I remain quite bullish on Ethereum and Solana because of what we continue to see with stablecoin adoption and the demand and excitement we're seeing for stablecoins from institutions. We can see that in a survey done by Fireblocks, about 49% of the institutions they surveyed are using stablecoins, 23% are pilot testing, 18% are planning stablecoin payments, and 10% are undecided. And of course, this is biased because this is a survey done by a crypto company, but I do think it's very clear that there's a lot of use cases for cross-border payments, payment acceptance, treasury liquidity optimization, merchant settlement, B2B invoicing. There's just so much that can be done by running these stablecoins on public blockchains. And I know a lot of people don't see the use case, especially if they're in a first world country with decent payment infrastructure like the US. But some of the top cited benefits of stablecoins are faster settlements, greater transparency, better liquidity management, integrated payment flows, enhanced security, and perhaps one of the most important ones is the lower transaction costs, especially on chains like Solana. And there seems to be a lot of excitement right now that alt season is around the corner. I don't know if that's confirmed quite yet. I haven't really seen signs that that is definitely going to happen. And I also don't expect anything near 2017 because the market caps are so much larger now and there's so many more coins to fight over that liquidity and demand from entering investors that even if we do see something great, I don't think it'll be anything like 2021 or 2017 just because of the diminishing returns from this asset class being as large as it is today. But we'll see what happens over the next few weeks. Ethereum is fighting to get back to break even as of right now over the past year in terms of performance. Solana is almost back at break even. S&P 500 and NASDAQ are up about 12% over the past year, and Bitcoin up almost 60% over the past year. But as we look forward at the longer term, the federal government is still running these huge deficits. That trend continues to look like it's worsening. I know some people are saying other things, but until we see this growth not increase year over year, right now we're 23% above where we were in 2024 at the exact same time in terms of the deficit. And that trend seems to be worsening. And I believe exponential debt growth means exponential money supply growth, and that devalues the denominator that we price our risk assets in. So I remain bullish on risk assets like the S&P 500 and bullish on fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.